Hello, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points, and I'm Irina Orshkova, your nonprofit auditor. This video is not authoritative in nature. I'm just auditor that's sharing my experience with the nonprofit community. And today I would like to talk about statement of functional expenses. And one of the most common mistakes that I as an auditor see. Sometimes we do get communication from the nonprofit that indicate that we allocate all expenses on a statement of functional expenses. It's just simply 80% to program, 10% to fundraising, and 10% to general administrative expenses. That's not a good methodology. Let's talk about it. Statement of functional expenses, it's unique statement specifically developed for nonprofit organizations. And therefore, this is one of the statements that a lot of rating agencies and donors look to see how effective nonprofit is in its operations. Because every donor prefers to see more dollars go directly to program activities rather than administrative and fundraising. And it's understandable. However, it's not a simple exercise to allocate percentages. There has to be reasonable, very close to real life estimate that management needs to develop in order to allocate expenses. In this kind of methodology, when we allocate 70% to program, 20 to general administrative, and 10 to fundraising, it's incorrect on its face because not every expense is the same. We cannot just take every category and apply the same percent to every category. That just would not be correct. Some expenses by its nature cannot be either program or cannot be fundraising or admin. Let me give you an example. Legal expenses or accounting expenses, they cannot be programmed by nature. By nature, they supporting activities unless your nonprofit program is to provide legal or accounting assistance to your members. Otherwise, they cannot be program expenses by definition. They supporting type of expenses. They should be management and general expenses. Office supplies. If you have a category office supplies, typically it cannot be program expenses because program expenses are not office expenses. They are expenses that your nonprofit spend directly for the benefit of the participants of your direct program activity. Supporting activities are management and general fundraising. They're supporting, but they're not program. For example, insurance or mortgage expenses or bank fees, they cannot be program activities because you do not pay mortgage to support directly to your participants. However, if your nonprofit mission is to provide grants to participants and you pay those grants in the form that you pay mortgages for them, sure, then mortgage expense, but it's not would be programmed. Otherwise, if this is your organization building where you're paying mortgage, that would not be your program expense. So what it means? It means that the good methodology for your nonprofit and for every nonprofit is to look at the expense type. For example, salaries, payroll, occupancy, which is rent and utility, telephone, travel, legal fees, insurance, and so forth. And for each category, you need to develop methodology. For example, for salary, wages, payroll, tax, and benefits, we're gonna allocate the same because they're related type of expense, and they would be allocated based on the timesheets, some staff time studies, and you can what percentage of the time staff spent on the program 1, program 2, program 3, management in general, and fundraising. For occupancy, your methodology could be you're going to use square foot used for each function. For example, if you have a building and part of that building used to run program activity, right there you have meetings for your participants, part of the building where your admin office is, then you will allocate maybe 30% to program and 70% to admin. You can use square footage percentage. Office supplies, you will say, okay, if we're going to use office only for our office and program supplies, they would be 100%. Office supplies 100% to office, supplies for program 100% to program. Telephone and internet, you would probably gonna split number of lines and devices. You can also use a square footage if it's related to your main facility where you're located. Legal fees, you will see the purpose of the legal work, right? If the legal work was done just to support your nonprofit, meaning you use a lawyer to draft articles of incorporation or review handbook or help you for fundraising event, that's not a programmatic type of fees. But if you are firm that if your nonprofit provides legal assistance to your participants, that will be program expenses. Audit and accounting is always management in general, unless you're accounting firm that organized as a nonprofit. Then everything that you do will be program expenses. So therefore, the good methodology, it would be look in each line item and assess how you allocate it. Not just to use percentage and apply it across every type of expenses. It might sound complicated, but actually each statement of functional expenses typically has between 10 and 20 lines. So you don't have to apply that methodology for each general ledger account. It can be a group of accounts. Like I mentioned before, salary and wages are going to be the same as a payroll tax, benefits. Occupancy will be the same methodology for rent, utility, and related. Travel will include airfare, mileage, rent a vehicle, and so forth. So therefore, you can develop groups based on your statement of functional expenses and develop methodology for each type of expense, how you're going to allocate it. Then it will be reasonable, it will be relatable, and it's a good methodology would be based on a real estimate. So hopefully that will help you to design the allocation method for your nonprofit, and looking forward to see you for the next step. Continue to use GAAP correctly. Talk to you soon. Be safe.